Let's take a moment to listen to the voices of investing legends. These are the minds who have seen every single market cycle, who've built fortunes through decades of discipline, insight, and experience. Their words are not just clever phrases, they are lessons forged by time, trial, and success. Because investing isn't just about numbers, it's about behavior, it's about patience, it's about making smart decisions when it matters most. So let's hear from the giants of investing. Firstly, Warren Buffett, the Oracle of Omaha. He famously said, "Be fearful when others are greedy, and greedy when others are fearful." This reminds us to think independently, to avoid the crowd's hype, and to recognize opportunity where others see risk. Another Buffett gem: the stock market is a device for transferring money from the impatient to the patient. The real winners are those who stay calm, stay invested, and let compounding work its magic over time. And finally, risk comes from not knowing what you're doing. This is why having a trusted financial advisor matters. Someone who helps you understand your plan, reduce uncertainty, and manage risk wisely. Second, we have Benjamin Graham, the father of value investing and also Warren Buffett's mentor. He said, "The investor's chief problem, and even his worst enemy, is likely to be himself. Our emotions often sabotage our best intentions." He also said, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Short-term moves are noise. Long-term fundamentals win." And finally, to achieve satisfactory investment results is easier than most people realize. To achieve superior results is harder than it looks. Consistency beats chasing after big wins. Thirdly, we have Peter Lynch, the legendary fund manager of the Magellan Fund. His advice: know what you own and know why you own it. Understanding your investments is key to confidence and discipline. Lynch also said, "Far more money has been lost by investors preparing for corrections or trying to anticipate their next correction than has been lost in the corrections themselves." It's fear, not market downturns, that cost investors the most. And finally, the key to making money in stocks is not to get scared out of them. Steadfastness wins the race. Fourth, we have John Bogle, the founder of Vanguard and pioneer of low-cost investing. His wisdom: the stock market is a giant distraction from the business of investing. Ignore the noise and focus on your goals. He also said, "Time is your friend. Impulse is your enemy." Long-term discipline beats short-term reactions over time. And finally, don't look for the needle in the haystack. Just buy the haystack. Diversify, keep costs low, and stay invested. Fifth, we have Charlie Munger, Buffett's partner and investing sage. He noted, "The big money is not in the buying and the selling, but in the waiting. Patience is the greatest asset." Munger also said, "A lot of people with high IQs are terrible investors because they got terrible temperaments. Emotional control is more important than intelligence." And finally, spend each day trying to be a little wiser than you were when you woke up. Growth is a lifelong pursuit, and so is good investing. Next, we have Ray Dalio, the founder of Bridgewater Associates, known for principles and macro investing. Dalio warns the biggest mistake investors make is to believe what happened in the recent past is likely to persist. Don't anchor your decision to the latest trends. He adds, he who lives by the crystal ball will eat shredded glass. Trying to predict the future perfectly only leads to pain. And finally, the most important thing you can have is a good strategic asset allocation mix, the foundations of every successful portfolio. Next, we have Seth Klarman, the legendary value investor and author. Klarman says the stock market is the story of cycles and of human behavior that is responsible for overreactions in both directions. Understanding cycles helps us avoid emotional mistakes. He also advises, investing is the intersection of economics and psychology. Successful investors learn to master both. And finally, the most important thing in investing is the margin of safety. Always leave room for error. Next, we have George Soros, the renowned global macro investor and philanthropist. Soros reminds us, it's not whether you are right or wrong that's important, but how much money you make when you are right and how much you lose when you are wrong. Managing losses is as important as capturing gains. He also said, markets are constantly in a state of uncertainty and flux. Money is made by discounting the obvious and betting on the unexpected. Be open to change and opportunity. And finally, I'm only rich because I know when I'm wrong. Humility and adaptability are keys in investing. In number 9, we have Carl Icahn, active investor and corporate raider. Icahn advises, in life and investing, there are few things more important than temperament. Stay calm and decisive. He also advises, you learn in this business. If you want a friend, get a dog. The markets don't owe you loyalty. Be prepared. And finally, I always want to be in a position where I can be aggressive when others are fearful and cautious when others are aggressive. Contrarian instincts often pay off. Some final thoughts. So what unites these great minds? They don't try to predict every twist and turn. They don't chase the headlines. They don't panic or get greedy at the wrong times. Instead, they focus on timeless principles: patience, discipline, behavioral control, a sound plan, and sticking to it. This is why working with a trusted financial advisor matters, because they help you apply these principles in your own life. They help you avoid making costly mistakes, and they help you stay the course, even when it's hard. Investing is a journey, not a sprint. And with the right guidance, it can be one of the most rewarding journeys you'll ever take. If you'd like to find out more how we at AMP Consulting navigate through the investing journey, please contact us at info@advisormanageportfolios.com. We look forward to speaking to you again soon. Till next time.